What is going on, everyone? I hope you are all having a fantastic day. So unless you've been living under a rock, I'm sure you have heard about all of the craziness going on between the institutional hedge funds and Reddit's Wall Street Bets community. And if you've been following the situation pretty closely, then at some point you probably felt like you were missing out on some opportunity to make millions of dollars overnight, or maybe you even decided to roll the dice and either made some money or maybe lost a lot of money. Either way, today I want to use realistic math and data to show you how you legitimately can throw out your fears of missing out on these hot stocks right now and all but guarantee yourself a 2,000% return or more using pretty basic investing strategies that I'm sure you have heard before. So if that sounds interesting to you, or you just want to hear my perspective on all of the craziness that's been going on Wall Street recently, then let's jump right into it. So before I talk about how you can legitimately beat those hot stocks right now like GameStop, AMC, and several others, I quickly want to brush up on what exactly has been going on the market to make sure that we are all on the same page. Now, if you're like me and you've heard this story a million times and you know pretty much exactly what's been going on, then that is completely fine and you can skip to this timestamp to hear the exact strategy that I'm using to pretty much guarantee that I'm going to keep my head screwed on straight, not lose years and years worth of investment returns, and essentially guarantee that 2,000% return or more that we talked about earlier. But for those of you who aren't exactly sure what's been going on, or you want my really simple breakdown of my whole perspective on the situation, then here is a really quick crash course. So a majority of the news has been about GameStop, and while there have been a few other stocks in the conversation, that's the one that we're going to be talking about mostly today and use for the examples. So GameStop not too long ago actually released a lot of really good news, such as a 519% increase in online sales and a partnership with Microsoft, among some other things. And that actually caused a pretty decent increase in the share price of GameStop. And that increase was largely due to the actual fundamentals of the company. But around the same time, a user on Reddit's Wall Street Bets discovered that there were more shares of GameStop being shorted than were actually available for sale. And that might sound impossible, but this can happen because the same exact share can actually be shorted multiple times by multiple different people. And in this case, it was the multi-billion-dollar hedge funds who were dumping billions of dollars into shorting this stock because they believed that GameStop was on a downward spiral and would eventually end up like other major retailers like Toys R Us and go bankrupt. But as that natural price increase that we just talked about began, some of those short sellers had to cover their position, meaning they essentially had to cash out for a loss because they were betting that the stock was going to go down in value, so when it goes up, that means that they're losing money. But things didn't get too crazy until members of the Reddit Wall Street Bets community actually began purchasing what's called call option contracts, which allow them to leverage 100 shares per contract. And a call option means that they believe that the share price is going to be higher in the future. And as a result, the price continued to rise, more short sellers had to cover their position, hence the term a short squeeze that you've probably been hearing in the news. And this caused the price to rise even more, causing more people to jump in, causing more short sellers to sell for a loss, and within a matter of a week, the share price of GameStop jumped nearly 800%. And remember, an 800% return with an options contract means you're actually getting a significantly higher return on your initial investment because you're leveraging 100 shares at a time. And this meant that 12-year-olds and other retail investors around the world were waking up with hundreds of thousands of dollars in profit, and in some cases, several million dollars in profit. Now, if this is your first time hearing about this, first of all, congratulations, because that means you are very disconnected from the news, and I applaud you for that. But secondly, you might be feeling like you missed out on an opportunity, which is common, and this is referred to as the fear of missing out, or FOMO. And it's completely normal to feel that way, but just remember that the chances of you actually having timed this perfectly are very, very low. And every time you see a story about someone making millions of dollars from GameStop, there's probably someone else in the world who woke up with so many red zeros in their account that they may never recover financially. Remember that this crazy increase in GameStop has very little to do with the actual fundamentals of the company, meaning eventually when all of this hype has passed, the stock will return to a more normal level because GameStop is just not worth $300 per share. Alright, so now that we are all up to speed on what exactly has been going on, let's walk through a few examples to show you how you shouldn't feel sick to your stomach that you missed out on an opportunity, and how you can actually beat the crazy returns that people are getting on stocks like GameStop and sleep a lot better at night as well. Now, some of you are probably going to be a little mad about what I'm about to say because you're looking for some get-rich-quick thing, and if that's you, then this is not your solution. But let's take a look at an example to show you exactly what I mean. Now, if you've seen some of my videos, then you may have heard me talk about the concept of compound interest. And essentially, this is where your returns on your money actually begins getting returns on your returns and returns on your returns and so on and so forth. And over a long period of time, this can really start to add up. For example, if you invested just $100 today at an 8% annual return, after 40 years, your $100 initial investment without any additional contributions would be worth roughly $2,173 depending on how often you compounded that interest. Now, some of you may say
that's boring and it's more fun to make call options on GameStop and make millions overnight.
And you know what? You might be right. But I again say, for every person who's been making hundreds of thousands or millions of dollars on GameStop, there's someone else who probably lost a lot of money as well. Or will lose a lot of money in the near future when it goes back to a more normal price. The point I'm trying to get at here is that initial investment of just $100 will see a return of over 2,000% throughout your investing lifetime, as long as you stay consistent and invest in a diversified portfolio. And I promise that is not nearly as hard as it sounds, especially with platforms like Wealthfront that will literally do all of that for you. Over the past week, I've had several friends ask me if I'm jumping into GameStop, and I'm not, just for the record, and if they should jump into GameStop or some of these other crazy stocks, and what I tell them is actually a quote from one of my favorite investing books called The Little Book on Common Sense Investing, and that is, don't look for a needle in the haystack, just buy the haystack. You could spend your entire life looking for the next hot stock that's going to give you that multi-1,000% return, and you might get it right once or twice, but every other time you're probably going to get it completely wrong and lose a lot of money. I mean, even if you had timed this thing perfectly and bought GameStop on January 4th of this year when it was just $17.25 per share and sold it when it peaked on the 27th of January, at least at the time of recording this video, then you would have made a return of just over 1,900%. Now, that sounds awesome, and it is, and to anyone who pulled that off, congratulations. And obviously, when you get into things like options contracts and all of that complexity, then the return on your initial investment can be multiplied greatly. But so is the risk, and the chance of you timing it perfectly is slim to none. It is so easy to look back and say,
man, I should have just bought then.
But remember, even if you had timed this perfectly, it's probably a once-in-a-lifetime coincidence, and your long-term consistent investing is going to give you an over 2,000% return, as we showed earlier. And trust me, you will probably sleep a lot better at night without all of the crazy ups and downs that come with this pump and dump style of trading. So is there a way to beat GameStop and these other hot stocks and get those multi-1,000% returns? Absolutely, and it's called consistent long-term investing, like I've been saying all along. No, it's not glamorous and exciting, and some of you may be aggravated that I don't have some overnight solution to make millions of dollars. But the facts and data tell us that the get-rich-quick mentality is statistically not how people become wealthy. Just invest consistently in a diversified portfolio over a long period of time, and chances are you're probably going to beat the crazy returns that even GameStop and AMC have seen recently. So let me know what you think of all of this craziness down in the comment section below, and if you are looking for a super easy way to create a diversified portfolio like we talked about, then I highly encourage you to check out my review videos on the Wealthfront automated investing platform. And if you do want to give the Wealthfront platform a shot and start your long-term investing journey today, then there is a link down in the description below that will allow you to get your first $5,000 of investments managed for free, which is always an important factor when talking about long-term compound interest. I totally understand that it can be tough when you see all of these ridiculous news articles about 12-year-olds making hundreds of thousands of dollars overnight. But again, don't look for the needle in the haystack, just buy the haystack and then don't sell it for a long time, because chances are you're going to have the last laugh in the long term. It's definitely not as thrilling or glamorous as call options on GameStop, but I promise you will probably come out ahead. If you did enjoy this video, it would mean a lot to me if you would hit the like button, subscribe to the channel, and share this video with someone who you think would get value out of this content as well. And as always, thank you so much for taking time out of your busy day to watch my video. I seriously do appreciate it. Take it easy, and I'll see you in the next one.